Welcome back to the show. Let's talk to Craig Erlam. He's a senior market analyst for Oanda. Morning to you, Craig.
Good morning.
Let's talk about the Great British Pound against the Japanese yen. Is it a Great British Pound? What are your thoughts there?
It's not looking too great at the moment. We've come back into the cloud, which when you're trading above it is typically a bullish signal, and when you break below it is a bearish signal. You still need confirmation from a break from the lagging line, which is just a little bit further back. You can see in that blue cloud. But now we're in this very, very tense area of support, because we're not just talking the cloud. We're talking the moving average confluence. We're talking the rising trend line, which again, it falls off the chart, but this goes back quite a long way. There's a number of touches. They say you need 3 touches for a trend line to be significant. I think this is about 5 or 6. So we're talking about a significant trend line here. Okay. And we've also got prior resistance there as well around the 142.50. So I think the red flag in this case comes from the break below the cloud, which we've seen today. The yen, safe haven play on the back of this Trump North Korea rhetoric. We have seen it retrace a little bit, so we haven't yet seen the close below the cloud, and that's what you really want to see. But I think below 141.250, before 142.50, then that gives you the break of the cloud, the moving averages, and also that rising trend line and prior resistance as well. So that should be a bearish signal.
Okay. So the textbooks would say basically break the long-term support line is the first signal that you may have a reversal in trend. A close below that sort of 142.55 area, you'd have a close below the cloud and below the trend line.
Yep.
What would you constitute a close below it? Would you look for a 2-day close or a 1 to 3% close below that key level to convince yourself that the trend is about to change?
Like it always depends, because just a close in itself can be significant at times, but it always depends on how far. So if you go 10 pips below close, then I wouldn't see that as significant. I'd want to see another daily close to confirm below. If you're talking 50 pips, 100 pips close below, then for me that is more than significant enough to suggest that the market is intentionally pushed below and held below what is a key area of support. So
that's a very good point. And on that break, what sort of areas are you looking for the market potentially to trade down to?
Well, I think 140 becomes the next level of interest. 140 is price support. You can see it marked on here around 139.85. You've got to give these markets room to breathe a little bit, so I'll call that 140 personally. And then at that point, you've got the 233-day simple moving average coming into play. Not a commonly used one, but I like to use Fibonacci in my charting, and 233 seems to work for me. You can see that it worked quite nicely on this period back here. So that would be the next notable level of support as far as I'm concerned.
Craig, thank you very much indeed.
Thank you.